Good morning, everybody. It's been quite a morning already, and so I'm going to continue the high bandwidth connection and talk about the acquisition of our Ixia Solutions Group and to give you some more background on how we're winning in the markets. So let me introduce myself. My name's Mark Pierpoint. I'm the newest member of Ron's team. I just literally was confirmed in this position about a month ago, having been acting since early November. But I've been with the company since 1987, when I completed my PhD. And since then, I've been operating in almost every different function within the business. So from R&D, through product marketing, through sales, through services and support. So I know our businesses extremely well. And then since 2010, I've been operating on different parts of our profit and loss as a general manager. First in the EDA solutions business, then leading our software and modular solutions activities. And you've heard that we've grown that business from a very small amount in 2010 to the more than $200 million in modular that we now have that Ron mentioned earlier. Most recently, I've actually been within the CSG group, working side by side with Satish. I've been responsible for our internet infrastructure business, which within Keysight is our layer 1 network test business. It's about the same size as Ixia, and so as a result of that and the different perspective that we were able to take on the market from an industry standpoint, that was what spurred essentially the strategy to pursue a protocol business. Ixia really popped out of that, and I was involved as a business sponsor in terms of that acquisition. So I'm going to talk to you today about how Ixia, now integrated in Keysight as ISG, is really able to make the networks and the applications that we use every day stronger and more resistant to attack. As we see increased levels of digitization in businesses, this is only going to grow over the future. And so while I'm going to talk to you about how the foundation of our business, about being first to market, is so important in just the same way as you've seen with 5G, I'm also going to talk about how the combination of Keysight's massive footprint, our ability to leverage the supply chain and other aspects, is being blended with Ixia's real value proposition that continues with its customers. And I'm pleased to say, as Ron mentioned, that we're on track to deliver the $40 million worth of cost savings on an annual run rate basis that we promised earlier in the acquisition cycle. We're actually going to deliver that about 6 months earlier than originally planned, and we'll talk more about how that's progressing later in the presentation. So the Ixia acquisition closed officially on the 18th of April 2017, so it hasn't even been 12 months since that was announced. And what we're showing here is really the outcome or the contribution to Keysight in fiscal half 2 17. So obviously, as we go forward, we'll be able to give you some more compares. But what I wanted to point out from a business standpoint is that Ixia represents already the kind of business model that Keysight is striving to get to when Ron talks about a software and solutions-driven business model. You can see high gross margins, pretty consistent with a mixed hardware-software business. But you can also see the 37% of recurring revenue that comes from software and services contracts, which are there for a long period of time. But having said that, there are some real opportunities that I see in the business as well. You can see that from an international basis, our business outside of the US is only 38%, compared to Keysight's average, which is over 60%. And so we clearly have some opportunities here to leverage our footprint. So let me tell you a little bit more about the business. Like most of the other things you've heard today, we operate across the whole network cycle, the whole life cycle in networking, all the way from the design of the chips and the components that then get integrated into network equipment pieces, whether they be switches, computers, and the like, to those being interconnected and then deployed and rolled out in the network. The core of the business is around network test, and I'll dive deeper into that shortly. And then we also have an emerging business, the network visibility business, which Ixia had been moving into since the acquisitions of Anui and NetOptics in the 2012 timeframe. The interesting thing is that both sides of those businesses touch security, and I'll give you some specific examples of how that plays out. And I thought since we were at the New York Stock Exchange, I'll use a couple of examples that are finance-based. So let me start with our network test business. It is the core of what we do. It's about 70% of the revenue. And as you can see here on the edge, it touches wireless, but then really speaks to the interconnectivity that goes across the whole of the network today that we think about as the internet. Many of you may be familiar with previous terms. Is it datacom? Is it telecom? Over the last decade or more, we've really seen this merge into a seamless digital transaction, which is built primarily on internet protocol. And it is that testing of the internet protocol that Ixia has basically driven and helped define over the last 20 years. You can see the different types of products across the bottom, and you can think about the type of testing we do. It's not at the Keysight level that you're probably more familiar with, volts and amps and power. What we're interested in is the messages and the packets of information that flow. And you can really think of them as packets, different sizes with addresses on them, and it's that kind of information that we both collect, analyze, and then test. And this enables our customers all the way from designing the chips, designing the network equipment components, designing the networks in a pre-deployment mode that we really enable here from a test standpoint. We win primarily, as you've already heard, by being in the right place at the right time with our customers. This largely means that we need to be first. And so as we've seen ever-increasing speeds in the internet, so Ixia has been first to market with those speeds. Most recently, 400G, where we've been shipping products to customers for the last 6 months. And that really has helped bolster, and we've seen the start, I think, of a reinvestment phase in the network equipment space. We have scalable products all the way from pure physical hardware products, but you probably know that many of our customers are moving to more software-defined networks. So we provide virtual solutions, and then as we move forward, we have some really exciting cloud products that I'll talk a little bit more about later. And of course, we have a very comprehensive offering. While I mention Internet Protocol, the opportunities and the products that we have expanded from just simple protocols to more than 650, both in the network and in the wireless space. So let me give you an example of a Financial 1000 finance customer. Why would they be interested in ISG products? Well, they're running a network, and much of all of the work that we do today is digitized, and that passes across those networks. And they subscribe to a service that essentially allows them to mitigate DDoS attacks. These denial of service attacks that exist in the internet are where thousands of servers basically target a given server location on the internet with the view that they're going to bring that server down and prevent it from servicing the normal types of requests it would deal with. So if you're a bank or a financial institution, the chance of you losing trades is a huge deal. Not only that, but it could be tied up with millions of dollars. So no surprise, this company actually spends about $2.7 million with a company that tries to mitigate this circumstance. So what did we do? Well, we applied Ixia breaking point technologies. We essentially simulate real traffic together with DDoS traffic at a volume which will take down the servers. Essentially, we can simulate a whole metro area if required. So we set up a test plan with them. Complete set of services was done on a Saturday. The FBI were informed, and we started those test rounds. By the third test round, 15 seconds in, they were begging us to stop. We were about to take their servers down. It turns out that they hadn't configured those servers and switches exactly as they should have been. They would never have found this problem out had they not done these tests. More importantly, they were able to validate the processes that they were operating for each of these circumstances, and the personnel that they had were able to practice. Nothing like some practice to help improve. From the first test round, it was a 50-minute response time to the third test round where they were able to respond in less than 5 minutes. And you can see how that tenfold improvement in responsiveness would help them preserve their revenue, reduce the loss. So let me switch to the other side of the business, network visibility. This is a new area, as I mentioned. We've been moving into it over the last 5 years. And essentially what it is on the left-hand side of the slide, I've shown in light gray kind of an archetypal network architecture. It's a set of servers connected with switches ultimately to the internet. And this is very typical of what you might see in many different types of diagrams. The red parts of this slide are where Ixia engages. First and foremost, we access or allow access to the data that's passing over these live operational networks. We did that with a set of bypasses or tap switches. That information is then transferred to an appliance we call a network packet broker, where we're able to analyze and decide what's happening with that data. And as a result of it, we can then balance that workload. We can pass that information to the tools that the network managers use to keep the networks operational and performing at their optimum. This can then scale. You can imagine the complexities as speed increases. We can then scale this to cover all of the different speeds. And as we move into the new network architectures where more SSL or encrypted traffic is flowing, we can decrypt this and provide insight to these network managers. Now, while I could tell you about all of the great technical benefits that we have in this space, the ease of use, the great single pane of glass control over all these different types of networks, the reality is that in this space where we have customers that are really interested in running their enterprises largely, they don't really understand protocol or networking to the same level. And so it is the Keysight and Ixia expertise that really allows us to engage and win in this market. And that's what Frost and Sullivan gave us an award for in 2017. We just recently received this as the network packet broker market leader in this space. So let me stick with the theme of the financial model, but talk about it more now in an operational sense. In January 2017, the FBI estimated that in 2016, more than $1 billion of loss was made by industries due to malware. If your network is hacked, okay, you could lose some customer records. That's not a good day. But you could also have to pay a price, essentially, to be unhacked. And many of you will be familiar with that. Needless to say, if you lose other types of activity within the network, clearly the money can stack up pretty quickly. So in this case, a European bank essentially wanted to tie the front end of its security tools with the back end tools, which would allow them to monitor and make sure that they weren't being compromised in any way. Now, that sounds easy, and certainly if you have an endless budget, you can connect and put all the best tools in place. But they wanted to do this with a very cost-conscious position. So they called us, and we were able to put in the Ixia security fabric. We were able to deliver a completely different level of insight for them into the problems. And the CIO of their IT operations group commented to us that with Ixia Security Fabric, they were able to see things they'd never seen before, and they were able to reduce their deployment costs by 50%. Pretty decent results, and things that really step beyond the technical that you've heard a lot about this morning. The other benefit that we've seen as we've moved into this visibility space, as I mentioned, is a lot of these networks are operational. And as all businesses are being digitized, those operational networks are actually turning out in enterprises, everywhere from home centers in retail to finance to healthcare. So let me talk about the chart that's on the left-hand side of the screen. It looks like the business that we have from NEMs and service providers, where you'd expect us to be strong, has been decreasing. Actually, the business from 2011 to 2017 has grown 50%. What we're seeing here is a shift in the revenue mix of the business and a balancing across that portfolio, which gives us a lot more stability, gives us a lot more opportunity to grow, and we'll talk more about that. But our target is to get to a 60-40 mix here between the more traditional NEM service providers and the enterprise side of our business. So let me shift. I've talked about the differentiated solutions that we have in the market, but let me shift to the markets that we serve today. As Ixia has come in as ISG to Keysight, it's essentially allowed us to address an additional $2.5 billion worth of market. About $1 billion of that on the test side, and about $1.5 billion on the visibility side. So you can see the differential growth rates of those markets. You can see the overlay of the revenue mix that we have in the business. And so combining those, we essentially lead to the expectation that from a market growth rate, ISG should see about high single-digit growth rates in the markets that we serve. And why do we think this is something that's going to play out? Well, the data points that we have to continued exponential growth of data, not just from the mobile side that you've heard of now, but virtual reality, big data, artificial intelligence, machine learning, everything that we see today suggests that at least for the foreseeable future, we're going to see no slowdown in data rates. So as I look ahead and I look at the different trends and the changes that go in the market, often we think of those as things that are pretty disruptive. Well, certainly they are potentially, but let me give you a slightly different view on it and a conclusion that we draw. For certain, the big data is going to continue, and so there's lots of technology waves that are rolling through, and I'm sure you know all of them very well. But this digitization of our businesses, we are very, particularly in the industries that we're in, and I'm sure from a banking and a finance standpoint, you see it every day, we tend to think that digitization is done. It's ubiquitous. But McKinsey published a study last February 2017 that suggested that through all of their studies, only 40% of industry has been digitized today. And so we continue to see a good road there in terms of new customers, and typically those are customers that are not familiar with these technologies. And then finally, as markets shift to the cloud, this is probably the biggest disruption that we see. We're really tracking our products as we move more to software, taking those products into the cloud. We think we're going to be able to address new non-traditional customers there. And ultimately, we're continuing to see an increased demand for cost-effective solutions where we can solve our customers' problems without them having to be bogged down in technical details. So Satish showed the similar picture, our combo slide of where strategically we've been targeting some of our major acquisitions. We've seen that shift into protocol. This is absolutely true in the networking space as well. And so the purple blocks here with Ixia really enable us to address a much wider set of applications. And so in terms of top-line synergies, let me just give you a couple of the examples that we've seen so far. Last autumn, we introduced the first combination product that would allow the customers that we have with multi-use devices, like all of the cell phones we have today, to truly test their performance as they hand off between the cellular network and the Wi-Fi network. This is a big deal, certainly in terms of most of the data transfer. And so the combination of Keysight's UXM cellular network emulator with the Ixia Wi-Fi test solution really enabled us to do that for the first time, a totally unique product. Last week at Mobile World Congress, we announced a similar move in the 5G space. Satish has already talked about a network emulation capability that allows Qualcomm and Intel to test their mobile modem chipsets. But what we're talking about here is being able to do the same for the network infrastructure to provide true solutions for the base station side of the business. And we're moving into UE or user equipment emulation, which we have not been able to address before. The unique combination of Ixia and Keysight allows us to do that with the RF and microwave ability from Keysight, combining with the network and traffic generation capability of Ixia. So to wrap up this session, what I want to do is just shift you to the future. We're just in the integration phase. We have a long way to go. There's a lot of opportunities. And what we've really laid out is a three-point strategy that we call extend, complete, and expand. And I'm going to go through each one of those very briefly for you. So certainly the first piece is that we don't want to lose the core of the business. Being first to market, we continue to do that. But there are clear opportunities that we have within the business to do a better job of leveraging our platforms, driving R&D efficiency, and being able to develop then more new end-to-end solutions. This is what our customers are asking for. They want to know about customer experience. They want to reduce the cost. They want to manage and optimize their network performance. The second element of the strategy, the complete, is all about the integration. And so we've already talked that we did the cutover on the 1st of February. Sounds like that was a done deal. There's a lot of work to go on behind the scenes. But what it has enabled us to do, apart from move all the people, the processes, and the systems into a Keysight environment, is to enable us now to start to optimize and drive the cost savings that we want to get out of this acquisition. So a single ERP system, for example, in a $3.5 billion company is kind of unusual, but that really is the gateway for us to be able to open up a huge number of supply chain optimizations, improve delivery, improve a whole bunch of downstream systems. We've reduced already about 50% of the G&A portion within the combination. And just as an example, we inherited 37 physical locations from Ixia. We have closed 26, we will close 29 by the end of this quarter, 20 from Ixia, but 9 from Keysight, where we've been able to combine the best of both worlds. So that's a 78% reduction in fixed locations alone. And so that's why we're pretty confident. We've already seen in Q1 $4 million of cost savings. We're going to get an incremental $6 million in Q2, which is why we're saying we're getting to this $10 million cost saving point at the end of Q2. And we're going to accelerate, bring forward the milestone that we'd set for the $50 million savings to Q1 19. So the third piece of our strategy is all about expansion. It's all really about focusing on the go-to-market portions. We're really going to take the playbook that we've seen already in terms of industry focus and apply it to ISG. We're getting leverage already from our sales force. Mark Wallace will talk more about how we're doing that. But Keysight is stronger in certain areas. Ixia, ISG is stronger in other areas. We're going to continue to partner in our go-to-market activities. This is particularly important in the cloud as we launch new cloud products. We've had a unique product called Cloud Lens, which allows us to gain visibility in cloud applications. And just last week, we partnered with Eastwind Networks, who are a cloud-based breach analytics company, who are powering their product that's now live on Amazon Web Services using Ixia Cloud Lens. And I would expect to see a lot more of those types of applications as we move forward. So to conclude, the good news is we're ahead of our plan on integration. We still have a lot of work to do. We've got some very powerful growth drivers, which I believe are going to fuel the business as we see a lift in terms of network infrastructure recapitalization over the next several years. We're combining already the leading capabilities from Keysight with Ixia. And we're expanding the customer base and balancing our portfolio as we move more into enterprise. We're also adding new opportunities with some of these new solutions. So I think you'll agree it's a pretty exciting time. I'm very happy to be leading our ISG team. Couldn't think of a better thing to do right now, and really have a very bright future. So thank you for your attention. And I'd like to hand over to Jason Carey, who's going to take us through our Q&A.
Okay. And just maybe two questions for Satish. One is, how should we think about this 100 gigahertz to 400 gigahertz transition? And what's maybe the opportunity there? And is that maybe better thought of as an upgrade cycle than a new kind of incremental investment cycle? I mean, from a growth rate perspective.
Go ahead. Thank you. Thanks, Rick, for the question. Can you hear me okay?
Yes.
All right, good. Yeah, so first of all, our focus is on providing the complete solution to our customers across the ecosystem in the commercial comms area. Multiple technology waves are at play. You know, the one that everybody thinks about is 5G, because it's an umbrella term that's gaining a lot of interest. But for 5G to work, the entire backhaul of the network, if you think of the wireline side, is getting upgraded. And you're right to point out that 100G drove a pretty good part of our business in FY17. And we're well positioned with lead innovators in the chipset space, and also companies that are doing manufacturing for the end products that use the 100G technology. While a lot of the action that we've seen in the 100G has been as a result of the drivers we've seen from US-based internet companies that have been investing, we continue to believe that some of the other regions of the world, China namely, could be a prominent one, will turn on, because there is a completely different set of customers there that are mirroring their US counterparts, if you think of Google and so on and so forth. So we continue to believe that's positive. Along the way, there's this entire dynamic of cost per bit through the entire network that's playing out. So the question is, if somebody's entering the market later, would they enter and put capacity for 100G, or would they go to 400G? For us, the way we think about it is our platforms are enabling customers to do both, and we're well positioned because we start early with our customers in the R&D phase and walk through their whole life cycle. So for customers that have invested, to answer your question more directly, invested in 100 gig platforms from Keysight, might feel like a minor upgrade to get to 400G. But for customers that are evaluating this as whether I go 100G or 400G, it'll be a new capacity add. And we continue to believe that the 400G technologies are on target to be deployed from the work we're doing with chipset companies, and should be a positive driver for us in the second half of the year.
Okay, maybe on this side of the room. So Patrick, get your mic there.
It's Patrick Newton with Stifel. I guess two questions, if I may. First, for Satish, I think coming out of Mobile World Congress, to me it was at least clear that there's kind of a bifurcation in technologies where sub 6 gigahertz seems to have a lot more momentum behind it, both from a trial perspective, technology perspective, and just being able to work backwards compatibility with 4G, whereas you get in the millimeter wave realm and it seems to be a little bit more complex. So I'm curious from a Keysight perspective, A, would you agree with that conclusion? And B, does it matter to Keysight? If you get into a millimeter wave, is that a higher test content for you, or do you win either way? And then I have a question for Mark as well.
Okay. Well, thank you, Patrick. So you're right in saying that the first, implementation seems easier to do the sub 6 gigahertz version of 5G, because if you look at the 4G bandwidths today, you extend them and you get pretty quickly to the sub 6 gig. But what's interesting is, from an innovation point of view, when you look at the lead innovators that are enabling 5G to happen, they want to do both. You look at spectrum and allocations globally. Every regulators in the world that we speak to, FCC made some announcements around auctions for 28 gigahertz, so on and so forth. While China, MIIT has made some, moves towards millimeter wave commercialization as well. They're later on in the cycle. So whether, customers look at this, especially the companies that do chipset and companies that have to build devices, companies that have to build network gear, they look at it and go, for them, they have to upgrade their capabilities. And they have to be able to do both. The strengths of Keysight, you're right in pointing out we have our own millimeter wave technologies that Jay referenced that give us an advantage, but the fact that we're able to do both with a single platform allows our customers to scale and get the maximum bang for the buck, and that's why we're winning in 5G.
Okay, and then Mark, I guess a two-part question. You had a really good data point on the strength on your enterprise business. I'm curious if hyperscale customers are embedded in enterprise or if they're embedded in your NIMs for network test. That's number one. And then number two is on network visibility. I think Ron in his prepared remarks said your goal is to be number one in that business as well. I think most people look at the competition as Gigamon or NetScout, but I'm curious if we look at the growth rates and the commentary and the competitive nature of that business, there's a lot more noise coming out of Arista's DANs where they're actually investing in sales. You're seeing a lot more noise, some really good growth rates coming out of Big Switch. And you also, Cisco Tetration theoretically down the road is a competitive product as well. So I'm curious how you look at network visibility in the competitive landscape, specifically focusing on DANZ, Tetration, and Big Switch.
Okay. So let me take the second part first, and then you may have to remind me of the first part. Inevitably, as we've seen development of the markets, and I'll talk about it more from a market standpoint than any specific competitor, the question is, how much visibility do you need? And just enough is typically enough for some companies. Where the risks are perceived to be higher, maybe in finance or in healthcare, where they may be heavily regulated, then more visibility is generally being applied. And so what you're seeing is, certainly from the more generic switch manufacturer standpoint, where they're adding capability onto their switches to be able to do visibility type activities, we would expect that to go in, certainly in the just enough category. But what we've really found is that once customers understand what they can see there, then they want to go further. And it's still not very easy to do this with a live switch operating at full speed and still getting all the visibility data without dropping anything. And that's really where we're picking up. And the first part of your question was around how we consider the some of the big cloud vendors, maybe, are they in enterprise or not? That's an interesting question. I think we probably have, we're maybe bimodal still on this, but I would say that, some days Google are clearly operating, for example, as an enterprise customer. We provide them with tools in that same way. But I think in some days they operate like a service provider. And you could argue that some of them are even operating in some modes as an NEM. And they could be, some of the next generation customers. They're going more directly to chipset vendors today, building their own infrastructure. That's true of all of the big internet companies, by the way. So I agree with you. It's not easy to see exactly where they fit, but I think today we count them in enterprise to be strict.
Okay. Question in the back. Vijay?
Yeah, thanks, Jason. Vijay Bhagwat, Deutsche Bank. A question I get frequently from clients is on seat growth. What they say is, Vijay, we have to track seat growth, the increase in active seats for companies such as Key. So I'd like to get your views on seat growth and how should we think about it, across the portfolio. Thanks.
You want to take it?
Me? Clearly there's this whole concept of design wins or how many seats you've got. I think increasingly what we're seeing in the enterprise space is that customers are wanting to deploy tools when they need them and very broadly across their enterprises. So, as we move more to the cloud, as we move to more virtual solutions, we have various types of contracts that enable that. And so I guess we're less concerned about necessarily specific seats. It's more about how that's applied. Once you go back into the NEMs, though, it's still very much the case. We have some products now, for example, that can test a number of these protocol areas before a chip is even laid out. And so that's more of a traditional EDA model, and I would agree with you. Seats, design wins, however you want to call them, are still very important. Hopefully that answers your question.
Other questions? Right there. Yeah.
Hi, Raymond Lai, Leaf Wheeler. We're a shareholder. The question, you talk a bit about the history of your fabrication capability, kind of get more granularity in terms of your competitive advantage in terms of certain key product lines and how difficult it would be for some of your global competitors to replicate that capability.
Sure, I'll start off and then I'll turn it over to Jay. We have, as I mentioned earlier, a gallium arsenide and an indium phosphide fab located in our Santa Rosa facility. And the gallium arsenide performs up to a certain level, but indium phosphide takes it to a level that we do not see in most of our competitors. Most of our competitors do not have a fab and do not have that capability. The second thing that's needed besides the fab is to have precision machining. Some of the materials on the interconnects that were described before have to be milled to 1 millionth of an inch, and then therefore have to be gold plated in order to get the frequencies not to degrade when you pass the signals between chips to chips. On top of that, we create gold bricks that literally will keep out stray signals from interfering with the low-level signals that we're measuring, and vice versa, not have our signals go out and permeate anything else. That's also done in-house, and anything that is very high performance, we clearly will not sell to anyone else. So that's a unique capability we've had. We've had it since we've been serving the aerospace defense industry. When you talk about going up to 100 gigahertz or 100 billion cycles per second, that may be new to the commercialized world, but it's not new to aerospace defense. And we've been doing that for 30 years. So we think that's a real strong competitive advantage that we have. And even after the Santa Rosa fires, we have that up, we have that up 100%, actually producing more output than we were before the fires. Jay, anything else?
Sure, I can give you a little more color on that. So it does go back to the Hewlett-Packard days. And in the language of semiconductors, these are analog chips that we're talking about. So sometimes we think about fabs, and we think the big digital chips that come from 12-inch or larger wafers and require billions of dollars of CapEx. This is based on analog chips that are tuned to the needs of measurement circuits. So if you look at our network analyzer solutions, our spectrum analyzer solutions, our oscilloscope solutions, everything that's happening north of 100 gigahertz, it's these chipsets that are enabling that performance. And it really is a capability. It's the physical fab, but then it's also that expertise again, these PhDs that have been developing that and keeping that really tracking all of the technology needs over time. And as Ron described, it is very critical. We actually store some of the backup inventory off-site, actually in a different state, for exactly the kind of contingency that unfortunately, did hit us. And so we were able to recover very cleanly from that without any issues. So it's a big part of our capability.
Yeah, it's worthwhile to mention Colorado. We built a bunker there to store material, a year's worth of supplies from our IC processes in case some type of large issue, such as an earthquake or a fire, happened. And clearly we were able to get through that and get back up and running without that being a problem. The second thing we have is we have another fab that exists in Colorado that makes the thin film, high precision circuits that allow you to get your signal from the signal to the front of the instruments. Because even if you have a perfect instrument, or sometimes the competitors may talk about the specs of an instrument, if you can't get the signal from the board that you have into the instrument without degrading it, you are in trouble. The chain is as strong as the weakest link, and that a lot of times is the weakest link. So we also have a fab that's there, and we do some things on the software side in other locations for similar reasons.
Yeah, very good. I think we have time for one more question, and then we'll take a quick break.
Yes, thank you. Ed Long from GRG Inc. I just wanted to ask you about your projections in the aerospace defense area in terms of the growth rate. 2 to 3% seems rather low given what we have in front of us. And also, can you touch on your competitive position there and who you might compete with and any market share opportunities? Thank you.
Sure, I'll start and then I'll turn it over to Satish. There's two main reasons why we're bullish with the aerospace defense industry. One is the budgets have been suppressed for a while, and there is no doubt that the budgets are increasing, and we're looking forward to March 23rd when we can get the final appropriations out and get the budgets back to 100%. But as you saw, our rebound versus last year, we were up 20% in aerospace defense this last quarter, as well as the quarter before on the order side. So that's really good news, and we see that being a trend for years as the climate between countries has, let's just say, worsened. The second thing that has us excited is during the Obama administration, the money was being spent for bombs and bullets and logistics, and there wasn't much being spent for new high technology platforms and planes. We see the mix of the budget moving more towards Keysight with high performance technology. So a bigger budget with a higher mix towards us makes us very excited about the market. When it turns on, given the government process, is a little bit of a guess right now. We talked about that being towards the second half of the year, our conference call on Thursday. But Satish, you may want to add something.
No, thanks, Ron. I think you covered most of it. Maybe just a couple of comments. The 2 to 3% rate, we believe, is the market growth rate. So that's number one point to highlight. And while aerospace and defense for us is a very stable business, it's a diversified business. It's a global business as well. So while we view the U.S. budget resolution that's pending and the appropriations process should be a positive driver for that business, we're also factoring in other sort of geopolitical tensions that are out there that could counterbalance some of it in our growth projections. But as Ron referenced, the areas of the market that we're focusing on are clearly the areas where many nations of the world are going to have to upgrade their technology infrastructure to combat with the next generation security threats that are out there. Okay.
And I'll just add that it's a great diversification point from us. One, it's been relatively stable, and the reason is that we don't just sell to the US. We tend to sell to friendly countries. Roughly 35% of our aerospace defense business is overseas. And when you look at the overall mix, there's been very small variations on the top line, and our gross margin and profitability in that business is very strong.